Good morning, I'm Chris Swift, and welcome to Market Day Report. And we do have a lot to go through this morning. I tell you, we've already seen some of the price action quite a bit lower in the markets, and especially since corn was a big gainer yesterday after a sharply lower opening, we're kind of right back down again. I got the July corn at $4.60, down 5.5, 57 1/4 low tick. December new crop, 442 3/4, down 4 3/4. Beans are the ones that kind of took it on the chin, down 22 1/4 on the July contract, $10.04, and we see that we have been below 10 in all contract months showing there so far this morning. I got Novi beans at $9.91, down 26 with 87 1/4, the low tick there. See what the Chicago wheat is doing. It's lower again. July down 9 3/4 at 540 1/4. December wheat down 9 3/4, 579 1/4. Kansas City hard red winter wheat down 9 on the new crop July at 571 3/4, 68 1/2 the low tick. December down 7.5, 609 1/4. And I know we've been really hot and heavy on the energy markets this morning. Let's take a look at gasoline. I'm pretty sure it's going to be down another 11 cents now. It's come off of its low by about 3 cents, looks like, 2.5, but still down 11 cents. So note that that's 204, and look out to September. Under $2 now for gasoline, 196.82. So it'll be interesting to see as we go into the fall of the year if some of that sticks. Let's get Brian Hoops in here from Midwest Marketing and see if we've got anything interesting from Brian this morning. Good morning.
Good morning, Chris. How are you?
I am very well, sir. I tell you, it's a fine day here in Nashville compared to yesterday.
Less rain, I assuming. We're getting all the rain this morning. Yes, we're getting all kinds of it. So, boy, what a market that we woke up to this morning. Overnight, China imposed its own retaliatory tariffs against the United States, 34% tariffs starting April the 10th. That's next Thursday. So that kind of deepens this trade war, and these markets just do not like uncertainty. So we fell sharply in the stock market overnight. We fell sharply in the crude oil. In fact, all the grains were down hard overnight, basically off of this news. You can kind of throw charts out the window. We don't know if you really want to talk about fundamentals for a lot of these markets because it's more about the trade war that's deepening and money flow. So sometimes when you get markets on a run, like a crude oil market that's sharply lower, there's margin calls to be met for some of these big fund traders. They may sell corn or sell soybean positions to try and meet those margin calls, square up their positions, and that just puts pressure on these markets that have really no reflection or fundamental bearing, but that's here probably for the short term. So we have this going into the weekend. It doesn't look like this is ending anytime soon, but on the plus side for the consumer, gas prices are coming down. They're going to be much cheaper at the pump, but that's, partially offsetting their 401k losses that they're waking up to this morning.
Well, and that's true. And Brian, I know that we always tend to exclude food and energy out of our economic reports there when we talk about inflation. So we know that most of these markets stopped in 2022, and we've not experienced a great deal of commodity inflation. So I think when we talk about these tariffs and the negative portion of it right now could lead to some different connotations a little bit later on down the road. So we're going to talk about that in just a second. We're going to go away, take a real quick commercial break, and we'll be back and talk with Brian Hoops on the cattle market. All right, welcome back to Market Day Report. We don't have the live cattle open just yet, but I think we're going to take yesterday's trade here and see where we're going to start off with right now. In the April contract, we were down 232 at 208.05. And I think Brian has heard of a little bit of cash trade this morning, so I'm anxious to see where that's going to turn out to be. June down 270 at 204.70. Out to the back end of December down 270 at 199.95. See what the feeder cattle market, it was down to 347 on the April at 285.40. Yesterday's index was a new all-time high, just above 291.93, if I'm not badly mistaken. The May contract down 480 at 283.12, all the way out to October at 287.02, down 440. Let's see what the hog market, it was a little bit softer as well. The April contract down 7, that's going to expire here, I think, next week. It's a pretty short dated in the month of April. The May contract down 55 at 88.57, and June down 97 at 95.55. Let's get Brian Hoops back in again. He's with Midwest Market Solutions. Brian, the cattle market kind of took it on the chin yesterday with this lower opening that we've seen in the energy markets and the equities markets. Are they due for another one this morning?
It certainly looks that way. We're probably going to open around 100 or so lower this morning in the cattle. Now, we are starting to pick up a little bit of cash cattle trade this morning, 335 to 340. So that's going to be at least steady to maybe $5 better, and some 212, 213 type trade. And most of that's in the Corn Belt, not so much in the Southern Plains, but that's going to be at least steady with last week as well. So decent cash trade. So I think you're going to see quite a bit of spread trade this morning. April will most likely stay tied to this cash market and won't fall very far. Delivery period begins Monday for April live cattle futures. Option expiration is today for those cattle. But the rest of the months, I think, are subject to see some selling pressure here this morning. And that means April gains against the summer and the deferred contracts. I do think the consumer is going to look at what's happening with the stock market and their 401k and kind of get a little tight-fisted in here and get worried about what's happening with their future. And that means less spending on disposable items, at least here in the near term. Now, gas prices coming down will help the consumer out a little bit, but that could mean backing away from steaks at restaurants, or at least higher end cuts of meat at the retail level, and until things settle down a little bit, or until some of these prices go on sale.
Well, and I tell you, so we've seen the complete reaction in the futures market on the cattle and on the live cattle market. But really, the actual producer, he just got that information yesterday and is now starting to have to make decisions based upon that. Maybe he's a little bit more influenced now when he starts in that cash market today in either the sale barn or coming into next week when we start to rebid cattle again. I have a feeling that the actual producer is going to start seeing some of this influence here today. Let me ask you about the hog market. I know the last Hogs and Pigs report didn't show much change in there, and we've been exceptionally volatile in that hog market. Are we going to stay in that volatile range? We're still probably $8, $9 basis spread.
I certainly think so. We've been very choppy, very much in a trading range, like you said. We've had very strong exports here recently, but I think that was partially due to the tariffs that were expected to be in place in this time frame, trying to get ahead of that and get some product built up on some of these countries like Mexico and China. So those exports, I think, will slow, and that'll keep a lid on any rally attempts for that hog market. But the numbers are tightening up a little bit, offset by higher weights in the last several weeks. So yeah, it's a market that feels like it doesn't really want to go anywhere except being very choppy and two-sided type trade throughout the next several weeks.
Fantastic. Brian, really do appreciate you taking the time to be with us this morning. As Brian Hoops, he is with Midwest Market Solutions. And Suzanne Alexander, good morning to you.
Good morning, Chris. Listen, I have no doubt your phones at your company are really ringing right now.
I can feel it buzzing in my pockets.
Exactly. It's great that you have an incredible team at Swift Trading. It allows you here to break down the numbers for us here. So
I appreciate
always great to have you here.
Thank you.
Great job.